Some very interesting dynamics are happening right now to the US housing market based on my own analysis of Realtor.com's latest data. Hope you guys get a lot of value out today. I'm going to talk about the increase of prices, new listings, inventory levels, and of course, price reductions as well. This article was just posted on November 7th. So again, hit the like button and also subscribe if you haven't done so already. I post frequent housing market updates so you guys can be more informed. So this article, which I don't even read their analysis, is this one right here, but I'll provide a link below if you guys want to read it. Let me know if my analysis agrees to theirs. So instead, go to realtor.com/research/data, click on weekly inventory, and then click on that link right there. It takes you more or less to this information. I kind of like summarized it and also organized it to kind of share my own thoughts regarding what's happening right now. I haven't made this video in about 1 month. I tend to make this video every single week, so my apologies. Anyways, the most recent data we have from them is for the week ended November 2nd. That week, asking prices on a national level decreased by 0.7%. These are people who are listing a house for sale. The asking prices, the median number there, is down by 0.7% from the same time frame in 2023. This marks the 23rd consecutive week in which asking prices are down or flat compared to the previous 12-month period. Asking prices are down because of inventory growing, of course. We have more existing houses for sale from 1 year ago, which is causing asking prices actually going down. And on top of that, even though we have more inventory levels, sales are basically at a 14-year low right now, which is also keeping asking prices at relatively low levels as well. In my opinion, we'll likely see a seasonal decrease of home prices through the end of the year. And this again is from higher inventory levels, housing affordability constraints, of course, still, and also seasonal effects as well. All right, let's now talk about active listings, which is housing inventory. Some very big changes regarding this. And again, I haven't made this video in about a month, so I was kind of surprised by this, because I've been reporting to you guys how the growth rate of inventory levels has basically lost momentum for several months, and in fact is actually going down. Still up from last year, but not increasing at the same rate. So inventory has been higher compared to the previous year for 52 consecutive weeks ever since mid-November last year. However, the gain of 26.6% year over year that we saw last week is the smallest gain since the end of March this year. This is due to an uptick in pending home sales and of course a low amount of newly listed houses or new listings for the month of October compared to October last year. Let's take a look at that. This is according to Realtor.com for the entire month of October, how that compares to years past since January of 2017. I actually love how they share that. This graph is a little bit messy, but the brown line, which is right there, is this year. This is a measure of pending home sales or the amount of people who are getting offers accepted, right? So that increased by 9.9% this October compared to October last year. Last year is this pink line in which pending home sales were decreasing much faster than we saw this year. On top of that, what really caught my attention though as well is that pending home sales were higher this year than 2022, of course 2023, but also looking at pre-COVID levels as well. So for example, pending home sales were actually higher this year compared to 2019, which is in red, and also in 2017 and 2018, which is below here at around 350,000. Now there's 420,000 for the month. However, of course, it's not nearly as high compared to the craziness of 2020, when at that time we had approaching 650,000 pending sales, and in 2021, just under 600,000. But again, this year up by 9.9% year over year. Now looking at new listings, that basically went down greatly compared to September, a gain of 4.9%, but way below 2017 through 2021. In any case, it's kind of interesting to see that home buying demand is rising faster at 9.9% compared to new supply hitting the market, a small gain up by 4.9%. And because of this, this is one of the reasons why inventory levels are basically going down Still up from last year, but increasing at a slower pace. Let's talk about some good news for home buyers, so people looking to buy a house right now. So of course, because we have more house for sale right now, obviously buyers have more negotiating power with home sellers than in years past, especially compared to the craziness of 2021 and early 2022. And of course, this is especially true in markets that have a glut of inventory, such as in Texas, Florida, Tennessee, Idaho, etc. If you're interested in buying a home this year, go find a deal, especially if you're in an area that you want to buy that has a glut of inventory levels. So for example, my advice for you guys, if you guys want to buy a house in November and December, that tends to be a time of the year in which home buying demand is at its lowest, because a lot of people don't want to buy a house during the holidays. So therefore, you probably see less competition for a house that you're interested in. And because of inventory rising, you maybe have an opportunity to negotiate to get a house for far less than the asking price, and or ask for a closing cost credit. A closing cost credit means that it decreases your out-of-pocket expenses in buying a house. So for example, let's just say your out-of-pocket expenses are going to be $20,000. You could ask the seller to pay for $10,000 of that. Therefore, your out-of-pocket expenses are only $10,000 instead of $20,000. However, let's talk about the bad news for buyers as well, though. So even though there's more inventory now compared to last year at this time, the gains are losing momentum for the past 6 weeks. In other words, like I mentioned, inventory is still up, but the level's actually going down. So for example, 1 month ago, inventory was approximately 30 to 32% higher compared to the year prior to that, but now we're up by only 26.6%. Let's discuss my key takeaways regarding these figures. Inventory growth has been stagnant, mainly from a low amount of houses being listed for sale or new listings. So for example, since early May this year, new listings have been up from a year ago by only single digits for the most part. Prior to that, it was on the rise by more than 10% for the previous 2 consecutive months. I'll discuss more about that here in a little bit. Let's first talk about what's happening right now regarding inventory levels according to altosresearch.com. So for example, as of November 3rd, there's just under 567,000 existing houses for sale. In other words, excluding brand new houses. Now, as of November 1st, there's 735,718. Therefore, we have approximately 169,000 more homes for sale this week compared to the previous year. That's an increase of 30%. So also according to altosresearch.com, looking at their data, the growth rate has basically lost momentum as well. So for example, 2 months ago, the gain was up by 38%. Now it's only 30%. So check this out. There's approximately 237,000 more homes for sale this last week compared to the start this year. So year to date, we're up by 237,000. That's an increase of 47% year to date. Compare that to the same time frame last year, we were up by only 20%. So in other words, inventory is growing much faster this year than 2023. It's also rising faster compared to pre-COVID levels when looking at data from the National Association of Realtors. So for example, the average change from January through September of 2017 through 2019 was an increase up by 16%. So pre-COVID levels, it's normal to see inventory increase by about 16% from January through September each year. Compare that to a gain this year so far, we're up by 38%, January through September this year. However, though, the year-to-date increase this year is much less than the same time frame in 2022. Back then, we saw a gain up by 45%, whereas this year we're up by 38%. In my personal opinion, home price growth should slow down due to four main reasons. Number one, the decline of asking prices of houses for sale, like I mentioned, more inventory levels, seasonality, and of course, a sluggish rate of home sales on a national level. To summarize, inventory is rising more than twice as fast as pre-COVID levels, again, up by 38% this year compared to 16%, but much slower compared to 2022. Lastly, even though we have more homes for sale right now compared to 12 months ago, we're still down by about 17% compared to the same week of 2019. One of the main reasons, like I mentioned, why we're seeing this kind of stagnation of inventory growth is because we're not seeing enough people listing their house for sale. So new listings actually increased only by 4.6% last week from 12 months ago. New listings have either gone down slightly or increased by less than 10% since the end of July this year. In contrast, they rose by over 10% from February through April this year. Therefore, the growth rate of new supply in the market or new listings has stalled, causing inventory growth to stall as well. Let's also discuss days in the market, or how fast or how slow houses are taking to sell. So over the past 1 month or so, it's taking about 8 days longer to sell a house nationwide. Of course, every market's different, but on a national level, it's taking about 8 days longer to sell. That is contributing to the rise of inventory levels, but in my opinion, this lack of new supply in the market is really causing, kind of putting a lid on the growth rate of inventory. All right, let's change gears slightly here and talk about the number of reduced price listings. Then we'll talk about the share of price drops as well. So last week, it actually decreased by 1.8% year over year. This marks only the second time since the end of January this year in which the number of reduced price listings decreased. This is much different compared to what I was reporting to you guys, because for comparison's sake, the week ended October 5th marked the 37th consecutive week that price drops were higher than the same time frame in 2023. So that's this right here. Last week, it fell by 1.8%. The week ended October 12th, it fell by 10.3%. But prior to that, we saw 37 consecutive weeks in which price drops increased. That was from October 5th, starting in all the way until, still going, January 27th this year. I mean, what a difference a few months makes. I mean, look at this. So from basically April through May, we saw price drops increasing by more than 45%. And now we're down by 1.8%. This is telling me that we're seeing price growth at relatively high levels, because if home prices were absolutely tanking right now, we would see price drops absolutely skyrocketing as well. And of course, inventory also skyrocketing as well. We're not seeing that, right? Because inventory levels only rose by 26.6%. That was the lowest reading since the end of March this year. And now price drops decreased compared to the previous year. In an environment in which we want to see prices fall greatly, again, inventory levels would be skyrocketing. And of course, because there would be a lack of sales, you'd see price drops also skyrocketing as well, which is what we saw back in, when was this? I mean, last time we saw triple digits was here. So from really November 5th, 2022, until we hit approximately March 25th, 2023, we saw price drops tripling every single week except for 1 week, really, 1 or 2 weeks. And that was an environment in which inventory rates were doubling, but home prices overall for the year compared to 2023 still increased by 0.9%. So I'm guessing we'll probably get into an environment by the end of the year that home prices will be up by about 3% from last year. Not this giant crash that YouTubers have been telling us is going to happen for years now. Now, speaking of a lack of a housing crash, take a look at this. Let me just zoom in really quickly here over the past 1 year. This is a share of price drops according to altusresearch.com. So in an environment in which prices are absolutely tanking, you would see price drops basically skyrocketing, right? But the share of price drops has been paid at around 39% ever since the beginning of August this year, has been flat. In contrast, look at 2022. 2022, let's just zoom in here. 2022, we had a 17% share of price drops in the trough. That was back in mid-March. And by the time we hit early November, it increased to 43%. This year, it increased from 30% to only 39%. A small gain up by 9 percentage points compared to nearly tripling back in 2022. Having said that, the share of price drops at 39% is on par with last year at 39%, lower than at this time in 2022 at 43%, But 39% is, of course, much higher than 21 and 2020. And on top of that, it's higher than 2019 when the share was at 36%. All right, that was a lot of info to go over in today's video. So here's a summary for you guys. Number one, asking prices have been down or flat year over year for the past 23 consecutive weeks. This is from an increase in the number of houses for sale. In other words, more sellers have to compete against each other in order to get their house sold, and that is driving down asking prices. The decline has also been tied to the sharp run-up in home prices that we saw over the past several years, and a big increase of home insurance rates in areas prone to wildfires and hurricanes, for example. Number two, housing inventory increased by 27% last week, but that was the smallest gain we've seen since the end of March this year. In my opinion, inventory gains are losing momentum from a slowdown in the number of new listings. And of course, real estate is local, right? As of October, this is according to Resi Club Analytics using Realtor.com's data, as of October, 8 states have more houses for sale compared to October of 2019. For comparison's sake, there was only 4 states that had more inventory back in August. As of October again, Texas has 13% more houses for sale compared to October 2019. Idaho is up by 6%, Florida is up by 10%, Utah saw a gain of 5%, Colorado is up by 7%, Arizona, big increase, up by 11%, Tennessee up by a whopping 14%, and Oklahoma is up by only 0.2%. By the way, the states that are likely to join that list very, very soon include Alabama, Oregon, and Washington. In general, this is kind of why I'm talking about this. In general, states and areas that have more inventory compared to pre-COVID levels are seeing price decreases or big slowdowns of price growth. So for example, in areas like Florida, according to the Florida Realtors Association, based on their median sold price for the state as a whole, that is actually down compared to the previous year. And number three, we all know that we have a big majority of people who own houses that do have a loan on their houses have a rate far below current rates today. And of course, that's keeping inventory levels and new listings at relatively low levels. In other words, we're no longer seeing double-digit growth of new supply in the market like we saw back in February and March this year. I do not expect to see a huge surge of people listing their house for sale unless unemployment spikes. In other words, I don't think we're going to see a big increase of new supply in the market unless we start seeing forced selling. People that are forced to sell their houses due to a financial hardship, such as losing your job. The recent rise in rates is also keeping new listings at bay because many sellers are also buyers. So there's a lot of people who want to trade in their 3% rate and take on a 7% rate. Number four, the share of price reductions is about the same compared to 12 months ago, but lower than 2022. Also, like I mentioned, in a span of 6 months in 2022, the share price drops back in that year surged from 17% to 40%, more than doubling. Compare that to this year, we saw a small gain up by 9 percentage points. Number five, for the past month, houses on average are taking about 8 days longer to sell. As houses take longer to sell, that all contributes to the rise of inventory levels. However, the lack of new supply in the market is also putting downward pressure on inventory. But wait, there's more. By the way, if you guys are still watching today's video, I really appreciate you. Please hit the like button. That's awesome if you guys are still watching today's video because, of course, this video is a little bit long. My apologies. Let's move on with it. Number one, average 30-year fixed rate mortgage rates were, keywords there were, in bold, were close to a 1.5-year low back in September. But now, of course, as you guys all know, rates have been increasing to about a 4-month high. Housing affordability has improved somewhat due to a decline in rates from last year. Of course, last year we had 8% rates, and of course, this year we have rates much lower than that. But of course, higher home prices though, right? It remains an issue, like I mentioned, due to elevated home prices, and in some areas, huge increases of homeowners insurance, such as Texas and Florida, and also parts of California, for example, in wildfire zone areas. Affordability constraints can be seen by the 14-year low of sales of existing houses that we saw in September, according to the National Association of Realtors. On top of that, we are on track to have the fewest amount of home sales this year than we had back in 1995. Number two, the most recent stats showing mortgage purchase applications, according to the MBA, increased by 2% year over year for the week ended November 1st. Also, the National Association of Realtors reported that pending home sales of existing houses in September increased by 3% from 1 year ago. In contrast, new home construction sales, and by the way, the U.S. Census Bureau defines that as a deposit taken or a sales agreement signed between a builder and home buyer. So for the month of September, that increased by 6% compared to September of 2023. So sales of existing houses rose by only 3%, but sales of brand new houses rose by 6% this September. Home builders are boosting sales by offering sales incentives to buyers, but of course, builders are still facing headwinds due to a glut of supply. In other words, basically on par with 2008 levels. In the greater Sacramento area, of course, where I live and work as an agent here, new home sales this August were the second highest for that month since August of 2004. That was the second highest, but the highest levels occurred back in August of 2020. And of course, September hasn't been published yet. I'll let you know once they do that. But every market's different, right? A big increase in sales of brand home construction in Sacramento, but I'm sure other areas probably have a lack thereof, right? Number three, looking forward for the nation as a whole, asking prices are down, inventory is up, homes are sitting on the market longer, taking longer to sell, and price reductions are more common now than they were in 2019. We have been moving towards a buyer's market, but every housing market's different. Inventory in California is down by 20% this October compared to 2019, but inventory is up by 10% or more in Arizona, Texas, Florida, and Tennessee. And number four, the most important one, I appreciate you guys so much for watching today's video. Please like and subscribe. Have an amazing day, and we'll see you on the next video.